So good morning, everyone, and thank you for joining us today. The name of our panel is Funding Your Future, Financing Strategies for Small Businesses. As we heard on the last panel, that's probably one of the most challenging areas, right, for owning and growing a small business. So my name is Angela Burton, and I am the District Director for the SBA's Lower Rio Grande Valley District. We cover 14 counties in southern Texas, all the way from Aransas, as far south as Cameron, and as far west as Zapata County. It's a pleasure to serve as your moderator today for this critical conversation. So whether you're just starting a business or you're trying to grow your business, access to capital obviously it's challenging. We know that the road to funding isn't always easy, and it can be confusing, overwhelming, and sometimes even out of reach. That's why our conversation today brings together real-world insight from a small business owner and a mission-driven approach from a CDFI, which we're using acronyms again, right? So each panelist will bring a unique expertise together, and we'll unpack how small business financing, what works, what to watch out for, and how to set yourself up for success. So let's jump in and get to know our panelists. So I'll just start with my left, and I'll allow you to introduce yourself, and then from there we'll move over to Raquel.
Yeah. Absolutely. Everybody hear me fine? Great. Thank you, Angela. So my name is Keith Dunning. I'm actually born and raised, educated in Canada. Came down to the United States 32 years ago as an RN. Was a travel nurse for the first 7 years and got to Texas as quick as I could, which is 15 years ago. After 7 years of travel nursing, I got into medical sales and Fortune 500 companies for 25 years. Recently wanted to retire, and even though I had dabbled in some small businesses that I could finance myself, I decided to take on some bigger businesses, start bigger businesses, purchase bigger businesses, and that's what led me into other financial options and pursuing those. So I'm honored to be here today.
Raquel.
Hi, everybody. My name is Raquel Valdez Sanchez. I am the CEO of a nonprofit organization that's been around for 35 years called Business and Community Lenders of Texas. We are really unique because we are not a traditional nonprofit. We are a financial institution. We're what they call a community development financial institution, or a CDFI, and we have that designation through the U.S. Treasury, along with a ton of other ones through SBA and USDA and a few other federal agencies. But it's a way for us to be able to provide access to capital in the ways that banks who are regulated cannot. And so it's really been great over the last few years to really develop out small business lending products, as well as help grow communities through economic development.
Thank you. Usually when I speak in public, I usually start with a short joke because I'm only 4'11", and normally the podium is usually about 2 inches higher than I am. But today I'm sitting down, so I don't have to start with a short joke, right? Thank you, Brian. So let's get started. I mean, usually when we think about our situation, when we're looking at it, we're looking at trying to solve a problem, right? The problem is that we don't have the financing to start our business or to even grow our business. And so getting to know Keith a little bit, I would like for him, because he's a real world example, right? I'd like for him to walk us through his financing journey and what options did he explore and what ultimately worked for his business.
Okay, yeah, that's a pretty broad question. So initially, I had started some smaller businesses, and I was able to personally finance those.
What do you
was-
mean by personally financed?
That was basically just my own bank account, basically. Did not need financial options other than what I had in my bank account and resources too. When I started getting into larger companies and wanting to purchase and start larger companies, that's when I really needed some guidance and some help. Just like you all, I was trying to just make calls, finding resources, calling banks, calling the chamber, and that kind of led me to trying to go the traditional financing route versus SBA. Traditional versus SBA, there's a lot of differences. With the SBA, being government funded, there's a lot of restrictions there. Traditional, there is a lot of restrictions, but more, I would say, credit score based, DTI based, things like that. So I ended up leaning toward an SBA. For me, the terms were just a lot better with being able to extend the payment over 10 years. The only pitfalls in that is the restrictions. It can take a little longer than a traditional loan, and that can get a little frustrating, but the terms definitely outweighed the pros and the cons, for sure.
So when you decided to get an SBA loan and you went to meet your lender, how did you prepare?
Well, the good thing is being in Fortune 500 medical sales for 26 years, I was able to prepare business plans and profit and loss reports. One of the companies that I purchased did have documents already prepared, so that was helpful, and I put what I'll call a positive spin on some of the numbers to make it look more attractive. Definitely before walking in, I would suggest having a positive spin and very positive numbers and just being very organized. It makes the process go a lot quicker. Mine was 60 to 90 days, which when you're trying to purchase a business seems like eternity, but there is the necessary steps you have to go through.
So can you tell us about the business that you purchased?
Yeah, so thank you. I guess I should have started off with that. But one of the businesses, one of the larger ones, it's called Island Outfitters. It's a golf cart company in Port Aransas. We have 60 golf carts with a storefront that we sell merchandise and also rent and sell beach supplies, including beach chairs and umbrellas. Which is incredibly popular this time of year, so I'm glad I have great employees that are covering me today. Going from Fortune 500 wearing a suit every day and now having flip-flop tan marks is a real change to my daily. But so we also have grown the business that we do shrimp boils on the beach. We do 3 to 5 of those a week. I actually have one tonight, so I'm very excited about that. We also have live music that we provide during these boils, and it's just really a lot of fun. We've been able to grow the business twofold in the last year, so it's been really a lot of fun.
Okay, so expanding these services, right? Did you, in your original projections, did you foresee those? Did you add those to your projections, or, I mean, are your projections coming true?
Absolutely, even more than what I expected. It's been a lot of fun. The social media team that we have has been doing an incredible job. It exceeded my expectations. But that was part of my planning. I live by my business plan and my profit and loss reports. I think those are the two most important things that you can do. And if you don't know how to do those, find the resources to have someone help with those, because those have guided me through the initial process and over the last year and a half to keep growing the business. So
Thank you. He talked about local resources, right? So as the SBA, we support what we call our resource partners, and you've heard from most of them today, but I want to give a big shout out to the UTRGV Veteran Business Outreach Center. They're here today in the back. The program manager, director's here. Yes, thank you. They support veteran-owned small businesses as well as spouses. So we just had what we call Boots to Business in the area this week. And so if you're a veteran, please reach out. Those resources are free. We also, obviously, you heard from SCORE Corpus Christi, Debbie. We have Ann Farova from Del Mar College SBDC, and then we also have Lindsay Young from University of Houston, Victoria. And those are all the resources on top of the governor's office, right? They have a lot of great resources to help you, get to the point where you can see the lender comfortably. So with that being said, I want to move on a little bit to Raquel, because even though Raquel's organization is a lender, they're a nonprofit lender, right? They work a little bit differently than an actual bank, right? So I want her to talk to us about what makes you different from a lender, and also talk to us about the demographic or your client that you all help and opportunities that you have with you have many different loan programs, including the state of Texas's loan program. So tell us about your organization.
Yeah, definitely. I'll tell you about our organization, but I'm also going to talk really broadly because there's other CDFIs in the room like Lift Fund. And it's where in our space, what we really found is that our banks do have to follow regulatory requirements through federal and regulation. Ultimately, what that does is it opens up a lot of gaps in financing for businesses and gaps in where they can be able to provide support and where there are other resources that need to be pulled in. And so within this space, it's where there are a few different nonprofits throughout the entire state of Texas, roughly about 15 of them that are CDFIs, BCL being just one of them. And with that work, it's where we look at how we can be able to support small businesses within communities. And when I say that, I really say that a lot of the work that CDFIs do is to be able to specifically support the communities where businesses can really grow and thrive and be able to build up their community in terms of the workforce there. And so that's job creation. It's where it's also creating a neighborhood-centric in terms of being able to really develop out the services that they're offering to the residents and neighbors within that area. And then being able to provide that access to capital in terms of additional taxes, because as our businesses grow, they pretty much are going to hopefully buy real estate and be able to grow their business by having land, having a location, having a brick and mortar, and that's going to be able to support that community as a whole. And so as a CDFI, what we look at how we can be able to, again, fill the gap. That gap might be needing to provide working capital for just general overhead for a business. Being able to figure out how we can be able to match needs around veterans and providing access to capital for our veteran businesses that are startups. Being able to look at needs around certain industries. And then also where CDFIs come in is when there is a disconnect and there is money that's going out, and I'll use right at COVID, how there was a paycheck protection program that SBA provided. And it's where they worked with banks, but they actually found that CDFIs were getting more boots on the ground to access those small businesses that are still operating as sole proprietors, that were doing Schedule Cs, and that were really just at that cusp of needing that support, but not necessarily having the traditional access that larger businesses had. And so that's where CDFIs are able to come in and really play a part. And so within the work that BCL does, it's where we're a statewide organization. Well, we're based out of the Austin market. It's where we run all over the state of Texas. And when I say run, we are literally driving all over the state to work in small communities. It's within those small communities we work with our city management and our economic development directors, as well as our resource providers for small businesses to say, what can we do and how can we be able to assist and help? And with that comes lending. Comes lending with access to capital through being an SBA lender, as well as utilizing other programs. And so it's where she mentioned the state of Texas. And the state of Texas has a small business credit initiative called the SSBCI program. And I'm using an acronym because it's a mouthful of words for me to be able to say. But with that, what we're able to do is do our loans, but then utilize the state's guarantee as well as their loan loss reserve program to be able to strengthen the risk of providing that support to a business owner.
Yeah, it's very similar to the SBA, except from what I'm told, and I don't know all the details, but it's a little bit less restrictive. Is that correct?
That is very correct.
So I want to know in here, raise your hand if you know the 5 C's of credit. I know you know the 5 C's of credit. Who else in here knows the 5 C's of credit? Okay. So this is something that you might want to write down and think about when you are going to see your lender, because these are the things that your lender is going to look at, right? So the first one is character, right? Character. What does that mean? That means, have you successfully repaid your loans in the past? Do you actually know your credit score, right? The second one is capacity. And they're going to look at, do you have the capacity to pay this loan back? You know, they're going to look at your income versus your debt ratio, right? And a lot of folks will come and they'll talk to us and they'll say, I'm going to start a side gig, but I need to quit my job. And the first thing you don't want to do is quit your job, right? Because you need to show that you have capacity to pay the loan. And then you need to have capital, right? You can't just come to the table without having some skin in the game, right? So you need to have a little bit of resources to come up with your down payment or your equity that's in the business. So what is it? Character, capacity, capital. The next one is, can anybody know? Does anybody know? You're peeking. Collateral. Do you have collateral to back this loan, right? Or at least part of the loan. So what assets are you going to bring to the table for your collateral? And then lastly, condition, right? We want to make sure that the purpose of the loan will meet what the current economy is looking at. Do you understand your proposed terms? So we want to make sure that the conditions are right for you, right? In certain cases, people will have an idea, but the economy or the conditions at that time are probably not the best, right? Do you, off the top of your head, do you have any examples of that, or
Of collateral.
or anything, condition?
Yeah, you know, one of the things that he mentioned before is living off the business plan. The business plan is a way to be able to show your capacity. It is also a reflection of character in the business, as well as you had mentioned the financials and looking at your projections. Those projections are really also another piece of capacity, being able to show how the business is performing. The way I always try to tell people is that when you're getting a car is your collateral, right? When you're getting a mortgage, you're getting a house, your house is your collateral. But when you're starting a business, it's your baby, it's your idea, you're the one birthing it, but nobody else is invested in the same because they don't know exactly what you have as an asset, what you have as collateral, what you have available. And so you really have to show that and be able to demonstrate that through that business plan, through those financial projections, through your information, and have somebody then say, I want to invest in that. And that's what a lender, a traditional banker, and then the CDFI on our side, what we look at is we look at more of the social collateral. Well, who else is willing to support your dream too? Is that something that your community is willing to support? Is that something that your family is willing to support? Is that something that others that are investing in you to be able to have this, such as your customers, willing to support? And we really contribute that as an alternative to traditional collateral out there.
So Keith, looking back, is there anything you wish you had known about small business financing when you were just starting out?
Yeah, that's a good question. I've learned a lot over this last year and a half. It's I took a lot of time making calls, finding the resources, and the fact that you have these resources here today, use them. They are invaluable. I wasted a lot of time trying to rely on the bank and friends when really I should have been using the resources that were available to me. It wasted a lot of time and money. So that's one thing I would definitely change.
Okay. So both of you, in one word, describe what funding means to you or your organization, in one word.
Growth?
I didn't give them this one.
Yeah, growth.
Everything?
Everything? Everything. I love it. Okay. How much more time do we have? Are we good for questions, or you want to start with?
About 20 minutes for questions, if,
Oh, okay.
That's a lot of time.
Well, I know that everybody has a lot of questions. Does anybody have any questions?
oh, come on, I know small business owners aren't shy.
Yeah.
They call me every day.
Yes, ma'am.
Do y'all do lines of credit or just loans?
Yeah, so CDFIs do have the capability to do lines of credit. BCL does lines of credit. I know other CDFIs that do lines of credit. Lines of credit are a great way for businesses to be able to have access to funds, draw it down as they need, similar to a credit card, but have a longer term and more better interest rates. One of the things that I'm seeing business owners kind of turn towards right now is merchant, what is it called? The merchant cash advances. High interest rates, super high. They kind of get them in a cycle of debt. And that's where CDFIs are able to come in and help support the refinancing of that. Not necessarily through SBA funding. There's some guidelines around that where we can't use our SBA funds to do. But through other funds that we have available is where we're able to then do those lines of credit.
Do you have something to add?
Yeah, I wanted to jump on that a little bit. You talked about the 5 Cs, which the process in getting the loan is a long process and hundreds of documents you have to provide. Once you get approved, I've found the bank is then your best friend and will loan you other money on top. Once you get that approved, that has also helped grow the business, being able to go there to them. I purchased land with the business and some other things. So once you establish the 5 Cs, going back to the bank is a lot easier.
Yes. And a lot of times we have folks call our office and they're already sort of in trouble with their working capital, right? I always say, get a line of credit before you need it. Because at that point, when you need it, it's harder to get. So please, even if you don't need a line of credit, get a line of credit because you don't know, what may happen in the future. You may get a huge contract and say, I need more working capital. I need more people. I need more materials. And so, one of my things is get a working capital loan. The SBA even has a program where they will guarantee 50% of that working capital loan with certain lenders. So it makes it more attractive to the lender. SBA does loans from $500 through our micro lenders all the way to $5.5 million. And the terms are lower. The terms could be longer. The interest rate could be lower. And there's a lot of different things that help the SBA or help you get this loan. And the goal from us two up here is to make you bankable, to make sure that we strengthen your business and get you to the point where you don't need either one of us, right? You can go straight to the lender and say, I need a loan for whatever, right? So that's really the goal, is to strengthen you and your business so that you can walk into the bank and, like he said, have the lender be your best friend, right?
And I was going to add really quick that it is about trying to build that relationship. And so while the paperwork at times, especially with, when you're utilizing federal programs, can be daunting, it's where at the end of the day, you should have that organization, that CDFI partner, that business development officer, loan officer, whatever their title is, really be able to help support you and walk you through that process. And so they're doing that of putting together a loan package with you. And they're also visiting with you on different products to see, like, maybe we should be doing this in partnership with your existing banking relationship. I'll use the example of, I have a business right now that we're working with. They're a wine restaurant business, and it's where they're looking at their second location. They had a loan that they were working on with a bank, a community bank, that was $1 million. It's where ultimately that bank, though, saw some risk. And it's because it's in an industry that at times the margins are small. And so what they did is they visited with us and they said, Raquel, we got a high interest loan from a company that is charging us like over 18%. We want to see if you can refinance that. And then we want you to visit with our bank to talk about how we can be able to maybe have y'all work with us. And as we talked, I said, let's do a participation. Let me do a portion of the loan, you do the difference, you're in a first lien and we're in a second lien. And that's something that we've learned over the years through our partnership with SBA doing commercial real estate financing under the SBA 504 program, is learning how to participate with our banks and being able to partner with them so that they can take the first lien and take on less risk, because we come in as a CDFI because we've already invested in the person, in the business, and what they're able to contribute and what they're able to do.
It's
And
all,
I did try the unicorn and the grants that they had mentioned in the previous session. Didn't work out for my situation, but I did try, and there are some out there, but they're hard to find.
yeah. So a lot of times those grants, what I've seen, especially down in the Rio Grande Valley, is they come through what they call pitch contests. And so the pitch contest kind of forces you to get your pitch together, at least know your return on investment and those types of things in order to compete for those funds. But going back, if just overall get an idea, if I am going to a lender, what kind of paperwork do you think, like, what are they looking at? Like, what do I got to take to the lender if I'm, I know I want to do my business plan, I want to do my projections that connect to my market analysis and all those types of things. But what types of documents do I need? Because a lot of times what slows the process down is trying to dig up those documents. So if we can get a jump on it before, right, and let you know, okay, start looking for these documents, maybe that'll help you. So what types of documents are you really needing when you see the lender and you want a business loan?
Yeah, I was going to say financials. And when I say that, even startups, you'll need to have financials. The financial projections are key. Doesn't mean that those financial projections are going to be something that's difficult for you to work on. It's where you utilize those resources. You utilize SCORE, you utilize the Small Business Development Center. They will help you put that together. Without that information, the business or the bank can't even really understand what the business is able to do financially and how they are looking to grow with the support of that financing, that loan, without having that information. That's number one. If you are an existing business, having the historical financial information of your tax returns, they're going to ask you for additional stuff, because it was where I think Laura from Lift Fund mentioned it earlier. Fraud happens. And so with that, they might say, well, we need you to fill out this form, and we need you to fill out this form. And it's all in the back end for them to verify information. The one thing that you want to do is, though, be very transparent in what's going on personally, bottom line. So if you are delinquent on anything, if you have back child support, if there is federal student loans that you're on a repayment plan for, talk about that with your lender at the very beginning. The more you're transparent about the things that you're working through, the more, one, trust is built, but then two, it's also where they are able to then figure out a timeline, because it might not be today, but it might be soon. We need you to work on some of these hardships that you have previously, and then in 3 months, 6 months, whatever the time takes, but it goes back to the resources that are here, those partners, the CDFIs. I mean, like, we do small business coaching outside of lending, and so that separate team does that financial education, coaching, et cetera, to get you bankable, to get you ready, to get you with that loan package and lender ready, really.
Do you have to take them any of your business documents, like your your incorporation papers or your sole proprietorship papers, or what else?
I would say that at this point in time, a lot of the time, we as lenders can look that information up online through the Secretary of State's website. It might be where they would like to have you have that, but it's back to you should have these documents available, the same way you have your birth certificate and your social security card available. You should just have a little binder with all your info. But as a lender at this point, technology's gotten so good where we're able to pull some of that information quickly, but we are going to want to see that you're in good standing. So we'll go to the Texas Comptroller's website, we'll look up that information, we'll go to the Secretary of State.
Ma'am, do you have a question? Yes. Okay.
Hello? Okay.
Hello.
I have a question for
Okay.
BCL, Rochelle. Do you work with lease companies, or do you yourself do any type of leasing for like equipment or heavy-duty trucks?
So we won't do leases, but we don't work with leasing companies, but what we'll do is we'll provide you with the capital to be able to purchase and have that as then an asset as your collateral in the future. And we will put a lien on that if it's being used with the financing we're giving you until your loan's paid in full.
Okay, thank you.
Yes, ma'am. Left, 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 left.
Hi, Teresa Eves. I had a question. Do the certs through SBA.gov give you more credibility or character points, I guess you would say? So if you go through that trouble with SBA.gov and you have your service disabled, veteran-owned, woman-owned, et cetera, does that give you more character for lending?
It doesn't give you technically like more character, but it's important for procurement, right?
Right.
Because those are things that you're doing to be able to have government contracts or local government contracts.
Right.
On the lending side, it's going to be still, how are you utilizing it then? That's what we'll be looking at, is more of how are you utilizing those certifications to be able to bring in opportunities, bring in business, and where's your pipeline from those certifications coming on?
Right. And then second question.
Can
go
I
ahead.
chime in on that?
Oh, there is that
I am
product.
SBA, right?
Yeah, there is that product.
No, what I'd like to say, though, is that the process of getting your certification will get you in the mood and get your documents together, right, to go see the lender. And we want our certified businesses to be able to get financing to grow their businesses through the certification. So I think the idea there is because you've gone through the certification, you already have a lot of the document and the paperwork together that you will need for your loan.
Great. And then my second question was closing cost on the SBA loans, I've heard is exceedingly high. As a small business owner, if I'm looking to expand or I have that first government contract where I'm having to pay my people sometimes 6 weeks, 8 weeks in advance, how do we control those closing costs? Because they're really high.
Yeah, so usually what your lender will do is they'll do it very similar to like a mortgage lender. They'll give you a percentage, they'll give you an estimate of what those closing costs would be. Each CDFI is different, and it's where for us, for example, what we do is we do put the closing costs in as part of financing so that you don't have to pay all of them up front.
Okay.
And so it's a way for you to be able to have that covered.
Perfect. Thank you.
Me again. Hello. This is an easy one. The governor's new office. Hey, how's it going? The new initiative he started to reduce waste and all that. Can you talk about how that's affected you guys in the lending? Do you know what I mean?
I'm not familiar.
What's it called? The new. Well, no, it's not Doge. The governor started an initiative out of his office. The freedom. Thank you. The freedom thing. Has it not come down to you guys yet?
Well, we're federal.
It hasn't
All right,
There's
come to
somebody
us.
from the state up here, so that, okay, somebody from the state, please come up here.
Well, we just happen to have our small business advocate for the state of Texas.
It's in the next panel. Stay tuned. Where'd she go? Right there. Stay tuned. We have Glenn Hamer and Jeff Burdett, who will be talking about exactly that in our following panel.
All right, any more questions? All right, well, I don't think it's ever been a bad thing to get to lunch early. For our caterers, are you guys ready? All right.
Let's eat.
Well, one second.
Oh, hang on.
Woo, wait. I'm gonna give you my email address if you want to write it down. It's angela.burton@sba.gov. And my direct phone number is 956-625-2076. And we are here to serve you. If you didn't want to ask your question today, send me an email or call me. If I don't answer, please leave a message, and I promise I will call you. But please, we are here to serve you. We are from the federal government, and we're here to help, right? But please call me, because we'd love to help you and send you in the right direction or give you the information you need. So thank you so much.